Welcome back, everyone. You're watching Yahoo Finance Live. And for this special Friday conversation bringing your way, focus on cost of living right now, and particularly here as we've continued to see a lot of retail data come out over the course of this week. Some of the focus needs to still be on areas where inflation is remaining increasingly sticky. Housing is one of those, but also if you look at the main areas that consumers are going to be concerned about, it is what they're paying just for their cost of living in housing and shelter, but also energy, where that factors into what they're purchasing here. And we've got, of course, our panel that has brought together some great statistics. And we've got Dani Romero, of course, Diane King Hall, and Julie Hyman, yours truly, Brad Smith here. And as we think about where the cost of living is, there's so much geographical focus, but perhaps we start with where homes particularly have continued, and the prices there for shelter costs have continued to remain elevated. This is something you track on a day in, day out basis, Dani.
And housing has two categories, right? We have houses like homes, and we also have rents. So they're a little bit separate. But let's go to the housing front specifically. Consumers are still very sensitive to rates. And now that mortgage rates hovered way north of that 7%, you're really seeing that pullback in demand. But another perspective is that today's rates are actually at a normalized level if you compare it to prior to 2008. So that's kind of to give you some perspective. Wow, to us it might be a little bit of a shocker, but if we compare it to historical levels, it is about normal range, the 7%. But we're also seeing that the Fed's efforts are really to crush inflation is really happening in that housing market, right? Demand is slowing down. The applications to purchase a home hit the lowest level.
But are prices coming down?
That's the issue.
And it goes back to that inventory issue, right? The supply and demand side of things. And inventory is still a big issue, but I think on the housing front specifically, it's the affordable inventory.
And it's not enough. I mean, with rates continuing to rise, like that 7% level, should it get to 8%, that's not going to get any buyers in the market. I mean, people are sitting on levels like they got in a home at 3%, 3.25%. They're not going to sell their home now because they can't get something new for better. So they're going to stay in that starter home for longer. It's going to become more than a starter home. They may raise their kids through college there because of where rates are now. And the indications when we think about where the Fed could potentially go, and especially what we heard this week, in terms of the minutes, it could go higher, right? And that just continues to hurt demand within the housing market, right?
One way that an economist had kind of explained to me is that if mortgage rates go up, there's actually more inventory that gets onto the market because the cost of households goes up, and so that squeezes the person. And so if rates are lower, if mortgage rates go down, that means there's lower inventory because that spurs up the whole hoarding, right? I'm going to stay in my home. But that was a dynamic that an economist brought up of how he's looking at the market right now. So that's kind of an interesting perspective to look at too, right?
It's hard to see it that way. And I mean, we talk to economist after economist about if it's a buyer's market, is it a seller's market? And the point that many of them come back to is it's neither. You can't go anywhere really. I was shocked when I saw that number. I know from a historical perspective, it's certainly not the highest we've ever seen. If we go back to the 80s, and I don't know if all of us were around in the 80s. I know at least 3 of us were.
Don't age yourself. Don't age yourself.
It's fine. I mean, two of us. Oh, okay. Right.
I was here.
You were here in the 80s?
Yeah.
Okay.
First smidge of it.
Okay. Yes.
First smidge.
Happy birthday shout out on air. We have to do it. It's only apropos.
But, the cost of living has certainly risen a lot since then. And when we think about so many of the different factors that consumers right now are faced with, there's housing, there's your energy costs, and energy costs have receded from some of the highs that we had seen even a year ago. And you think back to even the retail sales data that we've seen, and that gives us a sense of how consumers are spending and where they're looking at price. And for the retail companies that have reported earnings this week, while volumes might be receding a little bit, that price that they're having to pass on, that continuing to remain elevated as well.
I keep thinking too about, there's the cost of living and there's the perception of cost of living. And while we tend to talk to a lot of economists who talk about disinflation, the rate of inflation is decreasing. I don't think that's how consumers look at the issue. If you go to the grocery store, you're not saying, oh, well, I'm only paying 0.2% more this month than I was paying last month. You're thinking year over year, you're thinking over time, and you're thinking more of a vibe, more of a feeling. I mean, if you look at the food at home prices in July on an unseasonally adjusted basis, they rose 3.6% year over year. So food away, food in restaurants rose about 7% year over year. So even if you don't know exactly what those figures are, and even if it isn't going up at the same rate month over month, you still feel like you're spending more, and that is also going to inform your spending decisions in a number of different areas.
That's right, and we saw that play out in the numbers at Target versus Walmart. I mean, you know, Walmart was the winner there in terms of the grocery spend, right? Walmart gets, I mean, we don't know what it is for the quarter, but annually they get about half of their revenue from grocery, right? So they're winning there because, to your point, consumers are spending on needs. They have to buy food. Even if inflation is still sticky when it comes to food, you have to. You can't not eat, right? Excuse the double negative. But Target, right, they only get, about a fifth of their sales from grocery. I mean, look at their grocery section. It's much smaller. We had a conversation about that early in the week. And you're not, I mean, generally when you're going to Target, that's not necessarily what you're going for. And if you're making cuts to your budget and what you're spending on, you're going to cut out those non-essentials, right? So Target did a little bit better in beauty, but it wasn't enough to account for that slowdown in what they're seeing in other areas, right? Nobody needs to replace their throw pillows every quarter, whatever, right? You know, you're not replacing all your accessories, right? So Target needs to do something different. And we saw also the difference between Target and Walmart when it comes to e-commerce, right? So Walmart did better on e-commerce as well, right? And that was a surprise, right? They did 24% better, right? Whereas Target saw a slowdown. Target's talking on their earnings call about making some changes to mobile, et cetera. But again, Target also appeals to that more higher end shopper. And another kind of thing that we're waiting for and what this may do to quote unquote higher end shopper is the student loan payments coming back, what that's going to do to people's budgets, right?
Right. And so.
But will it though? Because a lot of the student loans have, I was reading your morning brief, Julie, and you really hammered that point home that is it really going to impact those budgets? I mean, I already got my student loan payment requirement, what I'm supposed to do. So, I mean, yeah, you look at it and you're like, okay, I see it. This is, I mean, it's lower for me than what I was paying before, but that's because I've been chucking away at it.
Well, so that's that, and that was the argument that I cited in that morning brief. It was from some Bank of America research that essentially said the people who suspended their student loan payments when they were given the opportunity to do so, are people whose household balance sheets were not in great shape to begin with. So in other words, when they have to repay, the marginal spend that's going to go away is smaller than it would be for someone who's in better financial shape anyway. So in other words, it's going to be just a smaller hit. Right. Yes, for that individual, it's going to make a difference. But if you look at the wholesale effect on consumer spending, it might not be that huge. Now, take it in concert with the work down in excess savings and some of the other effects. Exactly. Maybe you'll have a difference. But I also go back to the idea of the consumers being more choosy. You know, when Walmart talks about high net worth consumers spending at Walmart, trading down to Walmart, you know, it's not necessarily because those folks cannot afford to shop at a Whole Foods or a Target or wherever else. Maybe it's because they took that family vacation to Europe. And so they're reallocating the money. So yes, the cost of living for everyone has gone higher, but it doesn't, but spending hasn't necessarily on a real level, real spending, if you account for changes in inflation, that picture is not as clear.
And so, so just to kind of bring this all together here, because there's a few topics that we've talked about. We've talked about the cost of shelter. We've talked about the cost of just transportation, kind of getting around, and gas, but also the necessity in food as well. But what does this all come back to in your cost of living? It's how much you're making, which you were starting to get into a moment ago. And if we're looking at where that marries up to the data that we've already seen, the August 4th reading even in the survey of consumers, as they had noted there, the environment, the economic environment, consumers are perceiving little difference from last month, substantial improvements relative to 3 months ago here. And what does this come back to? It comes comes back to how much they're making and where the job opportunities to continue to come forward. And so even within that, we've been continuing to have the conversation about where there's been so much investment in the U.S., whether that is making sure that there are more chip factories that are getting brought online. We just had a conversation this morning about industrials and where they need to backfill for some of those jobs too. And so then you kind of see this circular motion of, well, if the wages need to still continue to go higher in those categories that are still hiring heavily, how does that still continue to add to the broader inflationary picture where companies are saying, all right, well, if the employment environment is strong, then people are still going to be willing to pay up just a little bit more. Yeah,
and I mean, that is a good point, especially when you think about how robust the job market has been. We've continued to see it hold up in the front of expectations for it to weaken, and it hasn't, and that begs the question about what direction are we going in terms of this fight against inflation, right? Are we going to continue to go higher? Is it, again, also that theme that we've heard, higher for longer? And then what that does in general to the economy, right?
Right. I mean, at this point, you have a lot of economists saying that the Fed is going to cut rates next year just to bring rates more down to a normal level. If indeed, though, you see the same trajectory we've been seeing where wages remain relatively elevated, because most of the folks we're talking to are still seeing it might not be as hard to find workers, but it's still not easy for them necessarily to find workers, particularly in the services industry. And then you can add on the new chip factories and all of that onto that. So if you're going to see that persistence, are you going to have the Fed with the ability to cut rates? It's far from a certain outcome at this point.
Yeah, definitely not right now.
I wanted to say one thing that we haven't discussed is the population. I mean, we've been growing. I mean, the pandemic babies, that's also another factor that I think we weren't seeing before, when now we're seeing it. Right now we have a newborn. People, I know my friends have newborns. And so that's something to consider in your budget too, right? I mean, if before you were doing okay, now you have a newborn or two newborns, there's some child care costs is really, household formation is happening. We're seeing that more so now than obviously during the pandemic there was, and also immigration is part of this too, right? So I think those are all other factors to factor into this living cost equation.
Yeah, and child care costs, by the way, are not slowing down.
Yes,
no.
They're not.
So that's something
we've had that, like just the conversation about that, and and what people are choosing to do when they figure out how they're going to manage their budget around that, right? It is expensive. Childcare is expensive. So we had this conversation about some people doing things like taking their kid with them to a bar, which there are some bars that are,
wasn't there?
Yes, some bars are family friendly.
You're in New York, I feel like.
I know my buddy took his child.
Right?
I mean, stick a baby in a carriage. You can take them anywhere. Trust me.
Yeah.
When they're small enough,
take them with
they're portable.
Exactly. They are
with
more
a pacifier.
portable then.
You just got to be able to check that sippy cup in a good amount of time,
that's
too.
right.
Absolutely. I believe we got to leave things there on the day before things get a little too saucy.
Wait, we got one more thing to say.
Yeah, what's that?
Happy birthday,
Oh, my
Brad.
God. Oh, goodness, with the hat and everything. You guys are too much. Wow. Yahoo Finance Purple. Happy birthday lettering. Love it. Thank you guys so much.